Yo, what's going on, everyone? What's up? What's up? All right, before I start the stream, if obviously you guys are gonna be tuning in, I'm gonna give you guys a few minutes to actually join before I start and all that good stuff. All right, and in the meantime, I'm gonna be getting the link over here and just putting it out there. So obviously you guys can see what I'm doing here. But guys, welcome, everyone. All right. But yeah, here I'm gonna put here, watch it here. Starting up the free class. I bet. Now let me put it over here on Instagram. Give me 1 sec. Oh, and let me put it over here as well. Okay, bet. All right. But yeah, what's going on, everyone? What's going on? What's going on? But here, let me go ahead and put out that I'm live over here on Instagram before I start the class. Let me see. Link. All right, there. Watch it here. All right, there we go. All right, it's posted. All right, what's up, everyone? What's going on? What's going on? All right, so guys, a part of me wants to kind of bring back these classes. You guys know I used to do them pretty much daily a few months back, but I'm not gonna lie, I don't know, I kind of just stood away from it. I kind of stuck more to my trading and all that stuff, but I'm sure you guys have noticed. I have been getting more into social media again on Instagram, TikTok, YouTube, all that stuff. So I want to start putting out more classes out there. So expect more of these classes, you know what I mean, as we go on throughout the weeks, throughout the days, and all that stuff. All right, guys. Now, for the people tuning in, guys, I got word from Apex themselves literally a few minutes ago that they released a 90% off discount. So if you guys do wanna take advantage of the 90% off discount, it is called Blastoise for the discount. All right, guys. But yeah, anyways, that's besides the point. All right, guys, and that'll be linked in the description. All right, guys. But okay, let me ask you guys here in the chat. All right, how many of you guys actually understand the strategy completely? Because I know I get about 700 people daily watching what's it called, the streams, and I feel like a lot of you guys are kind of not clueless, but you guys might be a little bit lost in terms of what I'm looking for in the markets and all that stuff. So honestly, as we're starting off the class, I kind of want to review a little bit more about the strategy or kind of summarize it in a way. Um and then going forward, obviously, I'll answer your guys' questions. We'll be preparing for the market tomorrow. And I also do want to be reviewing some of the trades that we caught this past week, which was a 100% win rate week. We went 3 for 3 on some really, really nice trades. All right. Let me see. I got a good understanding. I just don't understand the entry from the bounce of the fair value. Okay, we can go ahead. I'm seeing a lot of continuation models. Okay, so I'm seeing a lot of you guys are kind of confused in terms of how to understand the continuation. All right, we can start from there. Yeah, we can do that. All right, now I'm not gonna be reviewing the strategy from complete zero because if you guys are in here, I'm sure you guys know exactly who I am. I know you guys pretty much know how I trade and everything, and you guys know what I look for. So we're not gonna be starting from scratch. I'm just gonna be answering where you guys are kind of just um struggling in a way, which is the continuation model. All right. Anyways, so what we have here, guys. So let's say, for example, right? The first thing that we always need to be able to identify when we're looking at the markets before we have our model, before we have our strategy, before we have anything, is we need to make sure we know what the trend is in the market. All right. And in order to do that, I mean, it's pretty simple. I mean, if you guys have one or two eyes, you know, I mean, I'm sure you guys know how to identify the trend. It's really, really easy. If the market is going up, obviously the market trend is bullish, right? And if the market is going down, hold on, let me kind of fix this over here. If the market is going down, then obviously the market trend is bearish, right? That's pretty simple. I mean, I'm sure any beginner can understand this. But there's a little bit more that goes into actually being able to identify the trend rather than just looking at the market and seeing it go up or down, right? Because there are times where the market could look somewhat like this, where it looks a little bit slow, but it is slowly going up, or vice versa. All right. So in this case, the one thing I look for as we're looking for a continuation model, guys, is obviously you need to be able to identify the trend in the market. So in this case, the way we're able to do it is I look for one key thing in the market. All right. And that one key thing is, or two key things, you know what I mean, it could be one or two, right? Is just pretty much identifying to see the one thing you guys want to ask yourself is, hey, Is the market creating higher highs and higher lows, or is the market creating lower highs and lower lows, right? And the way you're able to do this is by simply grabbing the swing low here in the market, which in this case, in a bullish trend, you're going to find where the trend started, right? Which is going to be obviously the complete bottom of the market. All right. Then you're going to mark it out just like this, right? And obviously, the market is not only going to be going up, there's going to be buyers and there's going to be sellers. Now, when sellers try stepping in, what's going to happen is obviously they're going to step in and they're going to make the market have a pullback. This pretty much means that the market just goes down just a tiny bit. All right. Now, as long as this little tiny sell-off does not go below the low that we created down here, that means that the trend is bullish. This is going to be known as a higher low. Why is it known as a higher low? Well, obviously, this low is higher than the previous low, right? And that's where the pattern just starts to kind of form here. All right. So we have the main low, higher low. We have another pullback up here, which is going to be considered another higher low from the previous low down here. And this will pretty much just identify as a bullish rally gap. All right. Now, in this case, we're going to have another one right here, but instead the market is going down, right? So in order to find the pattern in how the market is pretty much trending is you're going to find the swing high in the market, which will be up here, the complete top right here as the market was selling off. And you're going to be marking out every single high as the market goes down, and you're going to be trying to find the pattern, which you're going to be asking yourself, hey, is the market having lower highs, or is it selling off, pulling back up, breaking new highs, and stuff like that. So in this case, you want to be making sure that every single pullback that the market has is a lower high pullback. All right. So in this case, you guys can obviously see right here, we have the swing high, lower high, lower high, lower high, right? And as the market is going down, we're also creating the main low right here, lower low, and lower low. All right, so that's step one done. I'm sure we all knew this, but just in case you guys are a little bit new to trading or to my strategy, now you guys know exactly what I look for to be able to identify a trend in a trendy market or a choppy market. Because obviously, sometimes the market might be a little bit slow in terms of volume, but it might still be trending, right? So in this case, for example, let's say that we have a very, very slow market, but we are constantly creating higher highs and higher lows, then yeah, this will be known as technically a bullish trend. Although it's not the prettiest, I agree with you guys. You know what I mean? It still is a bullish trend. All right. Now, a lot of you guys are asking me once again, hey, how am I able to find entries from a continuation model? All right. So before I go ahead and review that, I'm gonna go ahead and try to find an example really, really quick on a trade that I took for the continuation model. So I'm gonna go ahead and pull up my Discord over here so you guys can obviously see all the alerts that I put out and everything. And right here, I'm pretty sure last week or this week, or yeah, last week, this week that we just had, pretty much is what I'm trying to say. I think I ended up taking a continuation model from. Yeah, I did. That's right. I did. All right. So I took this on the 21st. So we're gonna go ahead and review the trade that I took on the 21st, which was based off a continuation model, and I'm gonna show you guys exactly how I found the entry, and how you guys can find it, what to look for, what to make sure that the market has before you enter, and exactly how to find your price targets to the upside or to the downside. All right. So let's go ahead and do that real quick. So I took this trade on the 21st at 11:20. Okay, yeah, this trade was a little bit slow. I remember this one. All right, so we're gonna go over to 11:20 on the 21st of May. So we passed that a little bit here. Let me go over to the 5-minute time frame. And we're gonna go over to the 21st. So it was around here. All right, okay. So first things first, what we're gonna be doing here in the market is, okay, let's say for example we're coming into market open, right? Right here, 9:30. All right, because I know a lot of you guys are actually gonna have this question in mind, and I'm gonna about to answer it to you guys, and obviously help you guys out in finding, like I said, the continuation model. All right, so the first thing that I always do when it comes to market open, you guys know usually the way I do it is, you guys know I always start the stream at 9:40 a.m. EST. Now, why is that exactly? Well, that's mainly because I'm preparing for the day. So when I hop on stream, you guys are always finding or always seeing the setups right away or my levels right away and stuff like that. So here's exactly how you guys can do it as well. All right, and it's actually really, really easy. So what you're gonna be doing, right, is coming into market open, you're gonna wait for the 9:30 candle to go ahead and open, right? And as you do that, what you're gonna be doing is you're gonna be making sure that you have every single level of your drawn liquidity marked out. What this will do, guys, is this will tell you pretty much the whole story in the market. You guys know, typically we always use fair value gaps and all that stuff to find our entry. But before the fair value gaps, we always need to make sure that we know exactly where the market is doing and what it wants to do. All right, or where the market is going and where stuff like that. You get what I'm saying. All right. So in this case, guys, what we're gonna pretty much be doing, let's say for example, we're currently reviewing the trade from the 21st, right? The long position that we took here. All right. So what we're gonna be doing is before the market opens up, we need to make sure that we have all of our levels of liquidity on the higher time frame marked out, so we're pretty much just prepared and organized for whenever the market whenever the market opens, whatever level we take from the level of liquidity, we will know exactly what it wants to do, and the market is just pretty much going to be telling us a story. All right. So in this case, right, the market has not opened yet. Remember, we are looking at the trade from May 21st. The market has not opened. You guys obviously know the market opens up at 9:30. All right. So what we're going to be doing here is, first things first, we need to be able to identify what the current bias is in the market, both in the higher time frame and on the lower time frame. Right. So currently I am on, I don't know if you guys see it because I have the banner here, but I'm currently on the 1 hour time frame over here on NQ. All right. So before the market opens, I always need to make sure that I know what the higher time frame is. All right. So in this case, we are, like I said, we are on the 1 hour time frame, and off the bat, we can see that the market is constantly creating higher highs and higher lows. All right. So if the market is in a bullish trend, we want to be paying attention to the higher lows being marked out. The higher highs, they're not really too important. That's just the market telling you, like, hey, we're really strong in buyers and we want to continue going higher. Right. But where the actual levels are important is the higher lows, right? Because this is where sellers try stepping in and they get rejected right after, because obviously the trend is bullish. All right. So let's say, for example, right, the trend started all the way down here. Let's just say, for example, right, we're going to be paying attention to this level down here, right? So the market opened up, it gapped up around here, and it created this low right down here. All right, this is where the trend is going to start. All right, so going forward, any pullback that the market has, right, that is going to be a what's it called, a higher low. That's going to be a level of liquidity pretty much marked out. All right, so first things first, the trend, let's say for example, it started down here over at 20,376, right? And then the market pushed up like crazy, pulled back, found this low right down here, right? This is going to be known as your pullback in the market, right, at 690. This is going to be a level of liquidity. So we're going to mark it out as a DOL, right? DOL, pretty much for those that don't know, it stands for drawn liquidity. All right. Now, when we find this low, right, we're able to identify that the market trend is bullish because this low is higher than the previous low, as you guys see right here. Main low, higher low, right? Then we have another higher low right up here, right? Because the market found this low, pushed up, pulled back, found this low, and pushed up even higher, creating both a a higher high and a higher low. All right, and then you're just gonna constantly do that until until you get to pretty much where the market opens. All right, so we have, we're going to label this as DOL number one, or the main drawn liquidity, right? The main drawn liquidity, as this is where the trend started, right down here. Then there's going to be a higher low right here, drawn liquidity, another higher low, a new one, drawn liquidity right here, right? Market pushed up. You would mark, okay, now here's where a lot of people get confused. All right. You're probably wondering, hey, the market pushed up, it pulled back right here and pushed up even higher, creating a higher low, right? So wouldn't I mark this out as a level of liquidity? Now, technically, yes, this would be a level of liquidity, but the whole reason it is not a valid level of liquidity is mainly because it already got taken out before, right? So we created this level of liquidity at 5 p.m. on May 15th, right? Now, if you go a little bit forward, you guys will see that, yeah, the market sold off, pulled back into this level of liquidity, took out the liquidity, and went back even higher, right? So what was once a valid level of liquidity is no longer valid because this level doesn't exist anymore. It already got taken out. All right, so what we're going to be doing in this case, guys, is we're going to move this level of liquidity from here to the new one, which hasn't been tapped into, all the way down here. So in the pullback, we have the main drawn liquidity, market pushed up, pulled back, found this level of liquidity. Have we taken out that level of liquidity recently? Not yet, meaning that this level is still a valid level of liquidity. Now, the market pushed up once again, pulled back, found this level of liquidity. Has it been tapped into? Not yet. Pushed even higher into this one, right? Has this level of liquidity been taken out? Not yet, right? So all of these levels of liquidity, they're all pretty valid here, right? And of course, we have another one right over here, which is the most recent one that we created about, what, like 3 hours before the market opened. So yeah, that's going to be a very nice valid level of liquidity. All right. Let me see. Hold on. Let me take a picture here. There you go. All right. So now what is the next step in the market? Well, we need to make sure, obviously, now we know that the market trend is bullish, and now we know that the market is obviously creating higher highs and higher lows. All right, so we have all of the levels of liquidity to the downside pretty much marked out. So what exactly does this mean? Well, what this means is if the market were to go down, we will be paying attention to these main levels of liquidity, which will pretty much tell us like, hey, if we take out this level of liquidity, do we want to reverse the market, or do we want to continue going lower into the next level of liquidity? All right, and I will explain that a little bit after I explain this. But yeah, that's pretty much the idea in terms of what you guys should have when you guys are looking for these levels of liquidity. All right. So now that we have everything marked out to the downside, we don't have anything marked out to the upside. All right, which pretty much means like, hey, if the market were to go higher, we need to know exactly where the market would want to go to before it might reverse in the trend. All right. But yeah, now in this case, we're gonna be marking out the main high right here, right? So the main high, the highest point that we have nearby on the 1 hour time frame is the 562 level of liquidity right up here. So we're gonna be marking this out as a DOL level, well, to the upside, of course. All right. Now, obviously, this is not the only level to the upside that we have. What we have to do is obviously expand our chart just a little bit more. Right. So what we're gonna do is we're just gonna zoom out just a tiny bit, right? And obviously, you guys will see that we have some more levels to work with right over here. All right, so what we're going to be doing is obviously we have this one up here, right? But let's say, for example, the market wants to push up, right? It takes out 562 and it wants to continue going higher, right? Then what? What would we target? What would we expect in terms of a reversal and stuff like that? All right, so you guys always need to make sure that you guys are prepared. Wait, let me see. When you guys always need to make sure you guys are prepared when obviously coming into market open with every single level of liquidity pretty much marked out. All right, so now that we took out this 562 level, we're gonna go a little bit back here, right? And we're gonna be marking out every single pullback that the market had as it was going down, and that's gonna be our valid level of liquidity. And keep in mind, price has not seen these highs in a few months. All right, so it's been some time. All right, so yeah, these levels of liquidity, they were formed, but they never got taken out, meaning that they still are pretty valid levels of liquidity. All right, so what we're going to be doing here, guys, is we're going to mark out every single level over here, right? So we're going to be marking out every single pullback as the market was going down. All right, so let's say, for example, we're going to start from up here, right? So we have 22,019.50, right? That's the complete top. Market sold off, pulled back, found this high up here. We're going to mark it out as another level of liquidity right over here, over at 21,867, right? Then we pulled back a little bit, or we sold off, right, a little bit more. Then we pulled back around this range. So right here in this case, we kind of have like more of like a triple top. As you guys see, we rejected off this one, and this one. Pretty strong level, I can't lie. All right, and yeah, that's pretty much it. Well, actually, not really. The market then from this complete top, we sold off, pulled back, found this high. Then we sold off again, pulled back from this high, and we sold off once again. All right, and guys, the main reason I'm not going to be marking out these levels of liquidity is obviously because right now, yeah, they're a pretty valid level of liquidity, right? But if we go back to the current chart, we already took out this level of liquidity, meaning that it is no longer valid anymore. All right, so the levels that we marked out up here, they haven't been taken out just yet because price has never been up here in a few months. All right, so now we are pretty much prepared on the higher time frame. All right, meaning that if the market, if the market were to go up, we will know exactly what levels to look out for and what levels to look out for a possible reversal or for a possible continuation model, which once again, guys, I will explain in a few minutes after I finish explaining this part. All right, guys. So in this case, now that we found all of our levels of liquidity on the higher time frame, what we're going to be doing is slowly going down one time frame anytime we find a new level of liquidity. All right, so now that we're on the 1 hour time frame, what we're going to be doing is going over to the 30-minute time frame. All right, now in this time frame, oh, and by the way, for my new viewers in here, or for the people that are maybe new to trading, guys, if you guys do not have my trading indicator marked out already, pretty much what this does for you guys is it will find Asia highs, London highs, Asia lows, and London lows, and pretty much mark them out for you. And for those that don't know, these levels, as you can see right here, I have like blue and orange lines. These lines right here are super powerful. All right, it pretty much marks out some extra levels of liquidity that you guys might have missed. All right, so in the meantime, I'm gonna go ahead and send it over to you guys in the YouTube chat. So just keep an eye out on that. And here, I'm going to leave my settings open right here. I'll give you guys like a few seconds to screenshot it before I go on with the teachings. All right, guys. So just screenshot these numbers right here. Just apply this to your trading indicator. All right. I sent it over in the YouTube chat. Just go ahead and mark it out, and we'll continue the class in a second. All right, guys. Hold on. Let me go ahead and put this over here. One sec. All right. Apex just released their 90% off sale. Yeah, bro, I know. I have it on the screen. As you guys see on the top, at the top of the screen, I have with code Blastoise, if you guys either want to join the Discord, which is the first link in the description, or get 90% off any Apex account, it is code Blastoise. All right, guys, that code works for both platforms. All right, but anyways, okay. So now that you guys got the settings for the indicator, once again, I sent it over in the YouTube chat. All right, guys. So pretty much what this indicator does, for those that don't know, okay, look, so we all trade futures here, right? I'm a futures trader, and I'm sure if you guys follow me and my trades, you guys are more than likely trading futures. All right. Now, futures has three sessions. It has Asia, it has London, and it has New York. We trade New York because obviously New York is one of, if not the best session to trade. It's not even one of, it is literally the best session to trade, right? It has the most volume. It's when the entire stock market is open. You guys get the point. All right. But when we're sleeping at night, you know, all that stuff, right? The sessions remain open. We have Asia and we have London. All right. Now, while we're sleeping, when Asia and London, when they're moving, they're creating these highs and lows that we can then use coming into the New York session. All right. And that's what this indicator marks out for us. So obviously, you guys know we wake up, we're super tired. The last thing we want to do is, you know what I mean, get up from bed. But we open up the charts, and off the bat, the indicator's like, hey, while you're sleeping, I went ahead and marked out these highs and lows, so you can go ahead and use when obviously you know you're going to be trading. So you know exactly where the levels are without you having to do the extra work in finding them. All right, so yeah, that's exactly what this indicator does. I hope I worded it correctly. All right, so yeah, so going over on the smaller time frame, obviously, guys, the smaller the time frame, the more candles, which means more noise. Which is why I always suggest to you guys, when you guys are first opening up the charts, coming into market open, always start on the higher time frame, as that will filter out the useless candles, and it'll give you the candles that really mean business. All right, then once you guys find all of those candles, you're gonna slowly go into the smaller time frames and just mark out some extra candles that you guys might have found, and I'm gonna show you guys exactly how to find them. All right, so on the 30-minute time frame, what we're gonna be doing is, as you can see on the 1 hour time frame, we don't really have, it seems a little bit messy, right? This recent price action, it seems a little bit messy. All right, so we're not going to be looking at this. All right, but on the 30-minute time frame, since there are more candles, right, we can see a little bit more as to what's happening on inside of the 1 hour time frame. All right, so off the 1 hour time frame, you guys saw that we marked out this main high over here at 562. All right, but what the 1 hour time frame doesn't show is that we have the main high up here. We have a new low right around this a new high up here around this London high, and then the market slowly goes lower and lower and lower. All right, so we have the main high up here, right? The market pulled back, but in this case, it is a little bit choppy, so it can get a little bit ugly, right? So in this case, all we're gonna be doing is kind of just marking out the London high and the Asia high. The Asia high, as that's what the indicator pretty much told us to mark out. All right, but on the 30-minute time frame, I'm not gonna lie, it does look a little bit ugly, so we're not gonna be paying attention to the 30-minute. Instead, we're gonna go over to the 15-minute time frame and see what else we have to work with here. All right, so yeah, now it is looking a little bit cleaner, as we're able to see a lot more candles and get a lot more of a story as to what the market is doing. All right. So yeah, we have the London high up here, we have the Asia high up here, we have another Asia high up here, and we have another London high right up here, right? Which we're gonna go ahead and mark out just like that. All right, and other than that, we don't really have any other levels of liquidity to mark out. So we're pretty much ready for the market to go ahead and open and pretty much take out any level of liquidity, and we go from there. All right. So the next step here, guys, is obviously just wait for the market to go ahead and open. All right, so you guys know the market opens at 9:30, so we're gonna go ahead and wait for that. Right around here, if I'm not mistaken, 2 more candles. Let me see, just like that. All right, so here, the market went ahead and opened, and as you guys can see, we have a huge spike in volume. All right, so this is where my strategy starts taking play. All right, so in this case, what we want to start looking for when it comes to looking at market open is with all of our levels of liquidity that we just finished marking out, obviously coming into market open, we want to wait for one direction to get taken out. Depending on whichever direction gets taken out, typically what we're going to be looking for is a reversal in that price. But that won't always be the case. Sometimes the market trend is way too bullish or way too bearish to the point where the market might take out this London high and where we're expecting a reversal, but it might continue going higher into the Asia high. And we take this one out, and since the market trend is so bullish, we probably continue even higher. All right, those are known as trendy days. Obviously, you guys know that, right? But there will be times where the market might take out this London higher low and just completely reverse, right? And I could probably show you guys an example from that from today's market. All right, so if I go over to M&Q, you guys will see that, yeah, that's pretty much what ended up happening, right? So you guys know today's market, today was Memorial Day. So the market was extremely slow and really, really short. It closed at 1 p.m. EST. But pretty much what the example that I'm trying to give off here, guys, is that the market opened, right? Look at this, right? So before market open, we had the London high and London low. All right, we came into market open, we took out the London high, and we got an instant reversal, as you guys see right here. We got the reversal into the next level of liquidity, which was this London low right down here. Once we took out this level of liquidity, what ended up happening? Well, we fully reversed right back up, right? So this is when it comes to my strategy, this happens more times than not. But when it doesn't happen, obviously we're gonna have a very, very trendy day. So that's where this continuation model comes into play, and here's exactly how we're gonna use it. All right, so going back into the main example, right? Coming to market open, you guys can see right here that, yeah, we took out this London high coming to market open, and for some reason, we don't have any sellers stepping in yet. Right now, this is one thing that you guys get very, very confused with, and I want you guys to really pay attention here. All right, so the whole reason the market is going up in the first place into this London high is to take out the orders that are in this level. All right, now when we take out this London high, you guys need to pay attention and make sure that if you're looking for a reversal, you need to make sure that sellers are stepping in off the bat, right? If you don't see buyer weakness coming in and aggression in selling, that probably means that, yeah, we might have taken out this London high, but we're probably not going to reverse from it because we have room for higher and buyers are still in a lot of control. So looking at this level right here, right, we're going to compare these two charts, right? So let's look at this one, right? We have a ton of buying pressure kicking in. We took out the London high, and we still don't have any single sign for sellers to step in, right? We don't have a red candle. We don't have anything. In fact, we have full buying candles. All right, now let's look at today's market, for example, right? We took out the London high, right? Look at this, guys. We came into market open straight buying, right? A ton of buying pressure kicking in, right? We took out the London high, and look at this, guys. We start getting very weak buying. We start seeing a lot more sellers stepping in, a lot more red candles stepping in, and out of nowhere, buyers lose complete control and sellers obviously gain the control, pretty much just shooting this price down. All right, so this is what you guys want to be looking for, like these candles right here, right? This just shows that there is weakness in the market, right? If you don't have this and you have this instead after we took out a level of liquidity, then that means that we're probably going to be going higher into the next level of liquidity, like this Asia high up here. All right, someone asked, what time frame is your chart? The 5-minute time frame. Right now, I am on the 5-minute time frame. All right, now looking once again, guys, compare these two charts, right? So this shows that we have way too many buyers stepping in, and we're probably going to go higher into the next level of liquidity above. All right, and the whole reason behind this is because obviously the buyers are really strong. We took out the London high, but we're not showing any weakness in buyers. All right, if anything, we're showing more strength in buyers stepping in. All right, now look at this chart from today, right? We had straight buying coming in. We took out the London high, and now we're showing a little bit of weakness here in buying to the point where sellers took complete control, making the market go all the way back down, as you guys can see. All right. So compare the two charts, guys. All right. So this is more for an IFEG model. This is more for a continuation model. All right. Now, for the continuation model, now that we know that price is probably going to shoot into higher, as you guys can obviously see right here, right? Let me go ahead and put it over here. Once again, just like that, right? Since we know that buyers are in complete control and we're probably going to continue going higher into all of these levels of liquidity that we marked out over on the 1-hour time frame, instead of looking for a reversal model, we want to be looking for a continuation model. All right, now this is where my fair value gap strategy comes into play. All right, guys. Now, you guys know I am mainly an NQ trader. All right, so for my rules for NQ on finding fair value gaps, obviously, first things first, we need to make sure that we have a very, very, very outstanding candle, right? And this one obviously outstands the rest. I mean, look at these candles right here. They're not the strongest, you know, they're kind of like whatever. But here we have a ton of buying pressure. All right, now, if we measure out this candle right around here, right, it should be more than 40 points on NQ. And right here, it is actually 10 more points than the 40 point, usual fair value gap, meaning that this candle has a lot of imbalances inside of it. All right. Pretty much for those that don't know what an imbalance is kind of just when we have a spike in the market, there are obviously a lot of buy orders or sell orders going into the market, right? And when the market is spiking and it is jumping everywhere, right, some of these orders might not get filled. All right. So pretty much what tends to happen is when these orders don't get filled before the market goes any higher, it wants to pull back into the imbalance where the orders didn't get filled, which in this case would be in this candle, fill those orders and then continue going higher, right? It's just so no one gets left behind. All right. So in this case, that's pretty much what's happening, right? We had more than 40 points, as you can see right here. We have a 50-point candle, and we have a full buying candle to the upside. All right. So what we're going to be doing in this case, guys, is we want to be making sure that as we're going higher and higher, that we're pulling back into these fair value gaps before we go any higher, right? So let's say, for example, in this case, right, the market is shooting up, let's say, into 43 and possibly even 562, right? And if I'm not mistaken, let me see if this, no, let me mark out this one instead, because this is where I got my trade from. All right, so in this case, guys, let's say that we took out every level of liquidity to the upside, right? We took out the London high, we took out the Asia high, and we took out this external high right over here, right? But we're still seeing a ton of buyers still kicking in. So what does this mean? Well, if we're not seeing any selling weakness stepping in, then we're probably going to continue going higher into 562, maybe 593, and possibly even 615. All right, so in this case, once again, guys, we are not looking for a reversal model because we are not seeing weakness in buying. We're still seeing a lot of buying pressure kicking in, meaning that we're probably going to continue going higher. So with this bullish value gap, instead of looking for an inverse, we want to be looking for a continuation model. All right, now, how exactly do I find an entry off of this model? Look how easy it is, guys. All right, simply all you're going to be doing is make sure you have your price targets above, right? In this case, it's going to be 562, 593, and 615. All right, now, as we're going higher, guys, right, or as we pull back into this fair value gap, you're going to simply wait for price to retrace into the gap. You're going to wait for price to bounce from this gap 30 points, and then you enter. Let me show you guys. All right, so let's say, for example, right, let's say price went ahead and retraced into this gap, into the middle of this gap, right? Then we bounced up about 30 points, which will be around here. All right, what you're going to do is you're going to find your entry right over here, set your stop loss at the complete bottom where the market bounced from, right? And this number should say 30. So your entry should be right over here, right? So 30 points. So when price goes above 518 after the bounce from the middle of the fair value gap, then you enter and set your price targets above like this. All right, now let me show you a real-time example as to how I caught this trade right here. All right, and by the way, guys, don't worry, I am checking the chat. I'll check it now after I show this example. All right, guys, I'm gonna catch up with the chat. All right, so now, guys, look at this. Remember, we have not retraced into this gap over here. If you measure out this gap, it is about 60 points. All right, so what we're doing, we're gonna wait for price to go ahead and bounce into the gap or retrace into the gap, right? Depending on wherever we bounce from, as you can see, we bounced from a little bit higher from the midpoint, which was at 493. You're going to wait for a 30-point bounce. All right, guys, write this down. If you guys are writing stuff down, write this down once again. I'm going to say it once again. All right, when we're looking for a continuation model, all right, you're going to wait for price to retrace into the fair value gap. You're going to wait for price to bounce 30 points, and then you're going to enter. Then you place your stop loss at where the market bounced from, and you're going to set your price targets at your, obviously, your drawn liquidity above. All right, so the way this trade should look like, guys, all right, should be you place your long position. The way you can find your long position, guys, is on TradingView. It will be the 1, 2, 3, 4, the fifth position over here. Double click it and click long position over here. Right, you're gonna place it anywhere on the chart. Right, it could be here, it could be up here, it could be up down here. It doesn't matter. Place it. All right. Then what you're gonna do is while the market is bouncing up, you're gonna grab the bottom of this of the long position and place it right down here, right at the wick where the market bounced from. Then what you're going to be doing is grabbing the middle of the long position and have it to say pretty much this number, have it to say 30 points, right? So you're going to drag it up and down. You're going to play with it for a little bit, right, until it says 30. So we're going to drag this a little bit lower right down here until it says 30, just like that, right? Let me kind of move this a little bit more. Hold on, entry price right here. There you go, 30. All right, then you're gonna find your price targets right up here, just like that. All right, now, guys, What this means, the reason I'm telling you guys it has to be 30 points exactly, or it doesn't have to be 30 points exactly. That's just what I prefer my stop loss to be. All right. What this will do, guys, is not only are you finding the perfect stop loss in this trade, but it's also giving you the exact entry as to where you guys should be entering from. So in this case, if we want to have a 30-point stop loss from the complete bottom of the fair value gap bounce, we want to be entering off of 522.75. All right, and that's exactly where we found our entry. And then we will go ahead and target the trade up here, right? And then long story short, the trade ended up playing out for, this one ended up playing out for about 50 points, if I'm not mistaken. Somewhere like that. Yeah, like 50 points. It was really choppy that day. So I know this example isn't the cleanest example, but it still gets the job done. All right, guys. But yeah, now, in the meantime, let me catch up with some of you guys' questions because I know you guys have a lot of questions here. So hit me with them, guys, and I will continue showing you guys some trade examples and we go from there. All right, guys. Now, let me see here. Let me see. Do you always wait for the MSS? It depends. If I'm looking for a reversal in the market or if I'm looking for a reversal trade like an IFEG or whatever, yes, you always need to make sure that you have an MSS model in play because remember, the trend is your friend, bro. If the market is going up with no confirmations that it wants to go down, why in the world would you take shorts? You need to make sure that price sweeps liquidity, buyers get weak, sellers get strong, and then we go from creating higher highs and higher lows into lower highs and lower lows. All right, that's how you find your MSS model. It's just a structure, a shift in the structure, right? So pretty much a shift in the trend. So from bullish to bearish or from bearish to bullish. All right, so yeah, in some cases, I have had a lot of people tell me like, hey, the market is going up right now. Why are you looking for shorts? Are you stupid? Well, and then I pretty much tell them like, hey, right now, yeah, it might seem like we are going up, but if you look closely into the market, we took out the drawn liquidity. Buyers are getting weaker as time goes on, and the MSS model is forming. That's exactly how I know that the market is going to go down very, very soon. And that's how I'm sure you guys have seen it on the streams or in the alerts. But guys, that is exactly how I find the complete tops and the complete bottoms of the market. So yeah, once again, I'm not a wizard. I don't know I know as much as you guys do, but I look for certain confirmations in the market that pretty much tell me exactly what I want to be looking for. All right, guys. So hopefully that answer helps you out. All right. Do you mark out all of your zones manually or do you use any indicators? Well, I actually sent the indicator above. I don't know if you saw it or not, but I can send it once again if you do need it. Maybe the chat might have cleared for you or whatever. But yeah, I marked them out manually, and I also have an indicator to kind of help me find the Asia highs and lows and the London high and lows. All right, and that's this indicator right here. All right, so I'm gonna go ahead and link it over to you, and just save it to your trading view, and you should have it. All right, and that's why you guys might be noticing that my blue and orange lines. That's pretty much why. All right, guys. But let me see what else I have here. To fully form. Let me see. To fully form. I don't understand the question. Owen, just retype it. Just retype it. Is there a difference in using wicks or bodies to mark out our charts? All right, good question. Good question. So I'm assuming you're referring to should we be using wicks or bodies to form the fair value gaps? All right. Now, my simple answer to that question is the bodies. Wicks do not matter. All right, guys. Pretty much, if you guys don't understand what the candles in trading, pretty much what wicks are is a history as to what the candle was back then. All right, the bodies mean that that's active buying right now, right? So let's say, for example, right here, right, let's say that we had a let's say, for example, this candle right here, for example, right, just imagine, let's say, for example, this candle is 40 points. Would this candle be a valid fair value gap? No, it's not a valid fair value gap. Why? Because this candle was 40 points, but it's no longer 40 points because obviously this was what price was back then. All right, but right now, currently, it is not 40 points. It is like a point, right? It's like 1 point. Yeah, literally 1 point, right? But let's compare this candle, which is mainly a wick, to a full body candle, right? This candle right here shows active buying. So this is buying that is currently existing right now. It's not what was, it is what is right now. All right, so that is what we want to be looking for. So when we're marking out our fair value gaps, you want to be making sure that most, if not the full candle, is a buying candle. So in this case, we have a 50-point candle that's straight with full buying. All right, in this case, it's more, there's nothing going on here. So hopefully that makes sense, right? So once again, when we're looking for fair value gaps, always make sure that most, if not all of the candle is a body candle. If it's not, don't trade it. All right. If half of the body, if half of the candle is a body and the other half is a wick, don't trade it. All right. It has to be a full body candle in order for the strategy to work. If not, it won't work. All right. So yeah. Let me see. Yeah, I meant for it to fully form. No, but you're good. Like, are there instances where you enter when the MSS has not swept? No, there will never be a time. Let's say, for example, the market is going up, right? Let's say that the market is going up and we just finished taking out a London high. Am I gonna take shorts off the bat? Definitely not. Why? First things first, we're missing a ton of confirmations and we don't even have our entry model. And second of all, we're pretty much playing against the trend. If the market is going up and we don't have any selling stepping in, why would we want to take shorts? That makes no sense. Now, in the other case, right? Let's say, for example, right? Let's say, for example, we have drawn liquidity up here. We have the London high up here, right? For example, London high right over here. London high drawn liquidity, right? Let's say that the market trend is bullish, right? We are pushing up like crazy. We formed a fair value gap right here, and we just finished taking out the London the London high, right? Now, after we took it out, what's it called? What confirmations are we forming in the market, right? So in this case, we have our DOL sweep. Why exactly? Well, price took out the London high, the drawn liquidity at the London high, right? Then we sold off. So right now, price is currently holding below the London high, meaning that we have the DOL sweep. On top of that, what else are we forming? Well, we're getting sellers to step in and buyers are getting weak, right? What does this show? Well, the MSS model being confirmed. And how exactly do we know that the MSS model is being confirmed? Well, mainly because the market went from creating higher highs and higher lows into taking out the London high and now creating lower highs and lower lows, right? So look at the trend here. We're going up, higher highs, higher lows. We're now currently going down, creating lower highs and lower lows, right? Bearish trend right here. All right. Now, the last thing you need here is you're going to mark out your fair value gap just like this, right? Your bullish fair value gap, right? And we're not going to be looking for a bounce from it because obviously we need to make sure that the fair value gap, since it's a bullish fair value gap, we don't want to be looking for a long position off this gap here because we already took out the objective to the upside. All right. So here we want to be making sure that sellers have the full control here to inverse this gap, and then we take shorts from here and target even lower. All right, which will look somewhat like this. Right, we target this, and then we have like a stop loss like this. Right, this is how an inverse model trade should look like. All right, but just because the market took out a London high or a drawn liquidity to the upside or to the downside does not mean you have to go against it immediately. Right, guys? You guys might realize, like, let's say, for example, let me show you guys some of my trades, right? Let me put it up over here. Let's say, let me try to find a trade where I snipe the complete top or I snipe the complete bottom, right? Okay, look, for example, right here, right? Look at this one, guys. So in this case, what we pretty much ended up having over here, guys, is we went from having a bullish trend into taking out both the Asia high and the London high over here, right? Now that we took it out, look at this, guys. We took it out. Sellers took complete control super quick, had a full selling candle going lower. What are we looking for here? Well, what we have is a DOL sweep, the MSS model forming, buyers getting very weak, sellers getting full control, and inversing this bullish fair value gap over here. So what we're going to do is we're simply just going to inverse the fair value gap over here, enter off this inverse right here, and target this London low and even lower possibly, right? And this trade ended up resulting in about 35 to 40 points, right? And that's exactly how I find these trades, or my reversal trades, right? But I kind of want to find a trade where I snipe the complete bottom here. Let me see. Maybe I can use this one for an example. This one wasn't too bad. Let me see. Is there another one I could use? Yeah, right here. Actually, right here. Look, 200 points, right? So look at this one, right? So right here, you guys can obviously see, right? Is this a pre-made video? No, bro. It's live. It's live, bro. It's live. All right. But anyways, guys. So you guys see right here, the market trend is going lower and lower, right? So we have sellers, pullbacks. The market trend is pretty much bearish, right? The whole reason we're going down is to take out every level of liquidity to a downside. As you guys see right here, we have a level of liquidity over at 19,749.50. All right, now that we took out this level of liquidity over here, right, this pretty much means that the market isn't really interested in going any lower as we don't have any other levels of liquidity to a downside. Now, if you don't have any other levels of liquidity to a downside, what does this mean? Well, it pretty much means that sellers kind of already finished their mission, right? There's no more of an objective in the market to go lower. All right. This pretty much means that sellers are no longer interested. Buyers are going to be stepping in, taking control, and going even higher, right? So in this case, guys, what do we have? Well, we have full selling going lower. We took out the drawn liquidity. We swept the drawn liquidity. We are now forming the MSS model from going into creating higher highs and higher lows into creating, lower highs and lower lows into creating higher highs and higher lows. Then we took out this bearish rally gap over here and inversed it. Then I took a long position, as you can see right here, into the price targets above, just like this, guys. Look at this, right? So this is exactly how I'm able to, what's it called? Find the tops and bottoms in the market using my reversal strategy. All right, but I kind of still want to continue, what's it called? Reviewing the continuation model because I'm seeing a lot of questions on that. See, your blasters, can you unsubscribe me? For the Discord. I don't really ban people. I don't know what you mean. Just DM me your or just send your Discord over here and I'll check it out after. But I don't really ban anyone, so I don't know. I don't know what you're talking about. Let me see. What other questions do we have here? Okay, let me see here. Blast, you told me to ask you next time you went live. So I'm about to get my first PA and I just got 3 evals back. Okay, well, wait, what's your question? Yeah, Chris, just send your question over again. I'll check it out. I'll check it out. Because you just told me that you were just buying more evals. Let's see. Blast, do you only use fair value gaps that have 3 bullish or? Oh, okay. Good question. Good question. So, pretty much what you're asking here is, someone said, "Are we still on for the one?" Yeah, right after, Javier. Yes, sir. Okay. So someone here asked, okay, let me kind of see if I can find an example here. So someone here in the chat is asking, do we only trade for value gaps if it's a 3 consecutive candle for value gap? Which pretty much means, do all of the candles have to have the same color, like in terms of buying or selling? And the answer to that is no, right? We can have a red candle here, a bullish rally gap, and another red candle, and it will still be a bullish rally gap. It will still work out the same exact way. All right. But yeah, typically when we have 3 of the same candles, actually no, it doesn't really matter. So yeah, that's pretty much my answer to it. It could be red candles, it could be like Christmas lights, it could be red, green, red, or green, red, green, or red, green, green. It doesn't matter. It will still work out the same exact way. So hopefully that answers your question. Let me see. I asked, how do I go about trading them? Should I just copy trade them? Honestly, it's all up to your comfort. Yeah, exactly. Smooth. Yes, sir. Yes, sir. But yeah, Chris. It's Are you comfortable with copy trading your accounts? That's not something I can really answer for you. Um, because you know what I mean. It's all preference. If you want to make more money, you copy trade. If you want to play it safe, you just do one account at a time. All right, it's all up to you. Me personally, I like to copy trade because obviously I have confidence in my strategy and I know I can probably make money with them. So yeah, I copy trade my accounts. But if you're not as confident, then just do one. All right. Let me see what else we have here. Does a 30-point bounce mean it has enough strength, or is it just 30 points to have a 30-point stop loss? Well, actually, good question. It's actually both, right? Obviously, if we're getting a 30-point, if we were traced into a bullish fair value gap, and we just finished getting a 30-point bounce from that fair value gap, that's pretty much buyers telling you like, hey, we're stepping in here. You should be paying attention because obviously, if you want to be riding the trend with us, we're showing you enough. We've already bounced 30 points, and you know what I mean? It's enough to tell you like that we're in control. And on top of that, yeah, it's also to have a very, very nice and controlled stop loss at 30 points. So it's kind of like a 2-in-1. So yeah, hopefully that answers your question. All right. Um, Let me see. Are the 3-minute fair value gaps valid as long as they meet the requirements, or should I not go below or lower than the 5-minute time frame? Good question. Honestly, I don't have actually any experience with the 3-minute time frame for value gaps. I don't know how they work, but I'm sure they work. Maybe they might have a little bit of different rules, like the 1-minute time frame. There are times where on the 1-minute time frame we might have like a 20-point candle or a 30-point candle, and it could still get respected because obviously, you know what I mean, we have 1 minute to form that candle rather than 5 minutes. Now, me personally, if you were to ask me, I would say stick to the 5-minute minimum. As that's my favorite time frame. I've seen the most success from the 5-minute time frame. It's not too much, but it's not too little. It's just perfect. All right. So hopefully that answers your question, my man. Do you take trades off the 5-minute or the 1 minute? I take trades off the 5-minute time frame. Always a 5-minute. Sometimes the 15-minute, but typically always a 5-minute. All right. Let's see what else we have here. Thanks. I got you, bro. Oh yeah, Blast. I'm using Forex Rep. Is it Forex Replay? Yeah, I think it's called FX Replay. Forex Replay. Yeah, same thing. Okay. Past times. Not many fair value gaps. In this time when it was less volatile. They were 30. Um, I can't really answer that question too much because obviously I didn't really trade fair value gaps back in 2022. And I don't really think they were as active in a way. But now, I mean, no, we get fair value gaps on like a daily basis, which is 40 points or more. So just stick to that. Just stick to the 40 point plus fair value gaps, and you should be good. But yeah, David, is it true that you're 5'2"? No, bro, I'm 6'2", my man. Mm-hmm. 6'2". How much you trim? Like 25% percent per trim? Okay, good question. Okay, so when I take my trims, I do it in two ways. All right. I actually do it. Okay, so sometimes the trade would hit the price target. Maybe I can show you guys an example over here. Let me see. There are times where I enter the trade and it instantly goes into my price target. Let me see if I can find you an example here. Uh, like this for example, right? Let's say for example, we took shorts off this right here, down here, right? And let's just say that the trade goes straight into our price target. How would I go about it? All right. Well, if the trade hits PT1, you guys know typically when I take my trades, I have multiple take profits. It could be 2 take profits, 3 take profits, or maybe even 5 take profits. All right. Now, anytime the trade hits the first take profit, I will always take out at least 50% of my position. I want to be making sure that I secure half of the position to the point where if it goes against me, I'm still going to be green on the trade. All right. So remember, if PT1 gets hit, you take 50% off and you move your stop loss to break even. No more, no less. All right. Now, there will be times where your price target might be 60 points for the first PT or 50 points, right? Now, typically what we do is we like to risk about 30 points on average per trade, all right? Which pretty much means that if you want to secure some profits at a 1-to-1 risk reward ratio, if we're risking 30 points, you want to be taking some profits off at 30 points profit, all right? So it's either PT1 for half trims or 30 points for half trims. And then I just move my stop loss to break even. And for my other runners, I just leave them do whatever they want to do. You know what I mean? So hopefully that answers your question, and hopefully I said it correctly. All right, to the point where you can obviously understand it. Um, but yeah, let me see. Blast. What do you think about the prop firm My Funded Futures? It's up there. It's a pretty good firm. Yeah, my number one firm is Apex. My number two firm is Top Step, and those are pretty much the only firms I've ever traded. But I have heard very good stuff about MFF. So yeah, it is pretty good. Do you think this model will ever get patched? Well, trading is not like a game. No, it's not gonna get patched. That's not really how it works. Now, one thing I will say is sometimes it might seem like yes, it might have gotten patched, right? But no, that's not how it works. All right. Now the reason I'm saying that is because look, the market has conditions, right? Some conditions are super bullish, some conditions are super choppy, and some might be even extremely bearish, like the tariff market conditions. Right now, some keep in mind, guys, this goes with any strategy in the world, in the whole world of trading, right? Not every single strategy will align with the market conditions. So let's say, for example, your favorite trader out there is trading a different strategy than you, and he's getting constant green days when you're not. That just means that his strategy works better under that market condition. All right. Now, for example, let's say you're trading your strategy and that trader is trading a different one, right? But we have different market conditions. Your strategy might work a little bit better than his. All right. Broken. Yeah, bro. I said I'll do it after this live. I Let me search up your name. I'll do it after. Let me see. Yeah, but yeah, no, the market cannot patch any trading strategy. That is not how it works. No. It's just like I said, with certain market conditions, the strategy might not work as well as other market conditions. All right, so it varies. It varies. But remember, the market has its own cycles every now and then. So yeah, it's not always going to be 100% win rates. All right. Do they have the profit and loss box on Top Step? They do. Yes, it's the same way. You go over on Top Step, it'll be like the Trading View UI, and then you just simply just click on this little thing right here where it says long position, and you just place it. All right. By the way, how many times are you live? I'm live every single day at 9:40 a.m. EST. Um, do you send your trades and plans in RP server? I do. Yes, in both my server and RP server. Yes. Um, Let me see. Are there instances where you enter a trade off a fair value gap that's less than 25 points? Never. That will never happen. No. The bare minimum that I will do for a fair value gap is 40 points, no less, ever. That's just, if it's less than 40 points and that's not even a fair value gap, that's not even an imbalance. That's just a regular candle. All right. So yeah, no, I the minimum I will always do is 40 points. All right. Regardless, I feel like the market always draws towards liquidity. It's just that delivery might be slow. Exactly, exactly. So, like I said, your favorite trader's stop loss might be a little bit larger than yours, to the point where he didn't get stopped out, where you might have gotten stopped out. You get what I'm saying? So yeah, the draws towards liquidity, it's pretty easy to read. That part is not hard. It's just finding the entry and timing it. You know what I mean? That all comes down to the market cycles. So market cycles might be really choppy, where we all get chopped out and stopped out, or it could be very trendy, where we find an entry and we're instantly green into our price target. Do you measure the wicks in? Yes, yes. You need what's it called? Yeah, I when I'm measuring my fair value gaps, I also include the wicks. Yes. So, but make sure that when you're finding out your fair value gap, at least 90% of the candle is a body candle. It can't be any more. All right, or I mean any less. My bad. So yeah, let's say for example, this right here, although we have a wick here, yes, we would count it towards the fair value gap, right? But let's say for example, we have a 40-point candle right here. Is this a valid fair value gap? No, because most of the candle is a wick candle. It is not active volume in the market. It is what was back then. All right. So yeah, this is not a valid candle. This and this is a valid candle. All right. But yeah, can I add your indicator to the on my top step chart? Unfortunately, no. Top step only has built-in indicators. They don't have community indicators. So if you want to use the indicator that I use, just use it over on TradingView. It's the same exact thing. It's just another application that I use to look at my charts. All right. So yeah, you can use top step to buy and sell, and just use TradingView to just look at the charts. All right. Do you recommend using Fib for extensions? I personally, I'm not gonna. I've heard a lot of good things about Fibonacci, but I've actually never used it ever in my trading career. So I don't know if it works. I don't know if it's reliable or not. So I wish I had the answer for you, bro, but I really don't. As to I've never really used it. So yeah. Now guys, I did okay. In the meantime, while you let me see. Um, I've noticed previous day highs and lows and PWL and PWL highs have tons of areas of liquidity. Why don't you I do actually. I do, Eric. I do. Which is exactly what I was gonna say before you sent that message. All right. Now let me see here in the chat. What's the best app for beginner trading for mobile? Good question. Now one thing I will say is, I don't want to be a Debbie Downer here, but trading on your phone is not the best for futures. At least it's not the best thing to do. All right. If you have a laptop, I highly, highly, highly suggest you use a laptop over your phone. But not everyone is in the best what's it called, in the best spot to to maybe they can't own a laptop, or maybe they're at work where they can only use your phone. Now if you can only use your phone, I would say use Top Step. All right, now you could use Apex and you could use Tradeovate, because obviously you guys know Apex provides accounts for Tradeovate. Tradeovate mobile is not it's not super user friendly. It's not the best one. It's not the worst one, but it's not the best one. You know what I mean? So if you guys were to trade prop firms, I would say use the TopStep X website. That's the best one for the phone. The TopStep X website is the best one. Now you could use Apex with Tradeovate, but it's not the best one. I would say TopStep X is a little bit better than Tradeovate for sure. But yeah. Now, one thing I was gonna do is, guys, I do want to prepare for tomorrow. Now, a lot of you guys always ask me like, hey, how can I trade, or how can I prepare for tomorrow? Like, how do you find your setups? Well, let me show you guys. All right. And by the way, guys, you guys can still ask me questions in the chat. I'll be reading them as I'm preparing, because I'm not gonna lie, I don't even have anything ready for tomorrow. So I'm just gonna do it on stream with you guys, and you guys can obviously just prepare with me and just ask me some questions as we go. All right. Now let me go ahead and see what we have here, because today's price action honestly was pretty. I mean, well, today was Memorial Day, so it was gonna be questionable regardless. All right. Let me see here. Do you look for the 40-point fair value gap on the 5 or 15-minute time frame? Pokemon Hunter. All right. When you're looking for your 40-point fair value gaps, make sure they're either on the 15 or on the 5 or 15-minute time frame. All right. if you're going to be finding a fair value gap on the 30-minute time frame or the 1 hour or the 4 hour time frame, obviously you need to make sure those fair value gaps are a lot larger than 40 points. All right, but if you're on the 5 or 15-minute time frame, yes, look for 40-point fair value gaps or more. All right, that's what I look for. So on the 5 or 15-minute. All right, those are my main time frames. But anyways, for today, guys, looking at NQ, honestly, we have a pretty clean chart coming into tomorrow. I'm not gonna lie to you guys. I actually kind of like it here. And speaking of, wait, oh shoot, yeah, Asia just opened up. All right, but yeah, guys. So what I'm gonna be looking for, coming into market open tomorrow is obviously I'm gonna mark out last night's London low that we had down here. And we can mark out these lows right here. So if the market were to sell off tomorrow, we could definitely look to target this low right here. It looks really, really interesting. I'm gonna mark out this one instead. I know I know the indicator is telling us to mark out this Asia low, which we could, but on the 5 and 15-minute time frame, it doesn't really look that interesting. I mean, if we were to take out this level of liquidity, why not take out the complete bottom right down here at 930? It just makes the most sense. You know what I mean? Um, Now we don't have really too many pullbacks to the downside that we created throughout the overnight session. And obviously today we kind of just chopped out, so there's not much going on here. Um, I guess we have more opportunity to the upside coming into tomorrow. So if we were to look for a trade, it'll probably be to the upside here. So, the way I prepare for the way I'm going to be preparing for tomorrow is just mark out every single high that we created as we're going down. Obviously, you guys can see here we are on a pretty steady downtrend in the market on the higher time frame. What we're going to be doing is I'm going to start off by marking out the complete top right over here. We have a really nice double top here, in fact, at 562. And then I'm just going to mark out this low right down here, which is going to be the next pullback in the market. Let me see. Look at yes, my boy. Yeah, bro. I'm gonna check it out now. I already said, bro. Relax. You don't have to spend the chat. But yeah, I'll check it out now. But to the upside, yeah. In fact, coming into tomorrow, we don't have too many lows to kind of work with, so it can either be a really messy day or a very, very, very clean day. Because I mean, the less levels we have to work with, I mean, if we take out the level, yeah, I mean, we could just probably get a full-on reversal from that level rather than waiting for the next one to get taken out. But yeah, let me see. Just bought 6 account using code bro. Thank you, bro. Thank you for the support, my man. But yeah, once again, guys, for the people in here, if you guys don't know, Apex right now is currently offering 90% off any funded account. So if you guys are interested in copying them, use the link in my description and use code Blasters to apply the 90% off. All right. And oh, by the way, if you guys use code Blasters, it also applies 70% off to any premium upgrade. If you guys do want to join my community to get the live trading and the trades. But okay. Anyways, for tomorrow, we have a pretty nice fair value gap here. Not bad, not bad. We created this fair value gap actually last night or on Sunday. Wait, was that last night? Today's Monday, right? Yeah, today is Monday. Yeah, last night we created this gap here. Not a bad gap actually. We could use this for tomorrow. I would say mark it out more like this. The thing is, this gap is way too big in size. Yeah, 100 points. So I probably won't be taking a trade off of this, but I'll probably form a bias from here. All right. So what you're saying is full port shorts for Asia? No, bro. No. Just hold those accounts on for tomorrow, bro. Then we'll catch some trades. But yeah. In terms of setups for tomorrow, instead of using the 15-minute, wait, we could just use the 5-minute over here. This one will be a lot easier to trade off of. It's not that big in size. We can take an inverse off this, and we could probably get a really good trade here. So guys, for the people that are charting for with me for tomorrow, guys, go on the 5-minute time frame and mark out this fair value gap over here on the 5-minute time frame at 18:05, which is like 6:05 p.m. EST. Right here, guys. This one is gonna be really, really interesting for tomorrow. So what we can do, guys, is we could probably take out this high up here, this New York high that we created earlier today. We could sweep it tonight with Asia or London, form the bearish bias, and shoot it down into this fair value gap over here, and probably get a trade into market open tomorrow. You don't trade Asia? No, I don't. I don't trade Asia. I only do New York. I only use Asia to find my levels and obviously find my setups for the next day. Did you end the top step challenge? Yeah, bro. Yeah, bro. I don't know if you're living under a rock or not, but bro, we requested 2 payouts from that top step challenge. Check it out over here. Look, this was the second payout that I requested. Right here. Right, yeah, we finished it. We got funded. We got the payout on this. You can see right here. And we got another payout a little bit higher up here, right here. Another payout on another account. You can see my account over here. But yeah, we requested a total of like 2.5k in like a week, around there. So yeah, pretty good challenge. We completed the challenge, bro. One and done. All right, so yeah, we're back to regular trading on our Apex accounts. But yeah, my thoughts on Top Step, honestly, a pretty good firm. I like it. I like the way they do the rules and the payouts. Did Powell talk over the weekend? Good question. I think he's talking right now. No, he's not. Okay, so in terms of news, guys, for tomorrow, no, Powell was talking that yesterday at 2 p.m. Damn, that's early as hell on a Sunday. That's I've never seen that before. But in terms of news for tomorrow, we don't really have anything really stopping us from getting any trades off market open tomorrow. We don't have any red folders or any folders that are really catching our attention. So for tomorrow, it's either gonna be very choppy or very clean. There's no in between. All right. And for Thursday, we have FOMC minutes, which I will not be trading. You guys know I do not like trading FOMC whatsoever. It's very slow. It's really bad to trade. I don't like it. I don't like it. So I'm just gonna take Wednesday off. For Thursday, we have some red folders and we have pending home sales, which could move the market. But we'll trade Thursday, and for Friday, yeah, we'll also be trading Friday. We have some regular news over here. But for tomorrow, we don't really have any news that's really stopping us from getting a trade. So for tomorrow, we should be good as long as the market obviously has some really good volume. So yeah, I'm excited for tomorrow for sure. Especially now that we have this 5, 15, and 30 minute fair value gap over here. If we're able to get a very bearish trend coming into market open tomorrow, we should have somewhat of a really good trading day. So I'm excited for that, guys. I'm really excited for that. But yeah, in terms of levels, I don't really have too much to really give you guys. I mean, the market's not really giving us too much to really work with, other than this high, and this high over here, and then these two lows down here. That's about it. I mean, there's not much I really can show you guys in terms of trading any setups here. So yeah, let me see. And in terms of questions, I feel like I'm pretty much caught up a little bit here. So I guess we're pretty good for the class. I mean, there's not much if you guys have any questions, let me know. But I mean, I reviewed the continuation model. I reviewed my strategy quite a bit. I answered questions. We prepare for tomorrow. I guess we're pretty good. And by the way, guys, like I said in the beginning of this class, guys, I am getting more consistent with social media, so expect a lot more classes like these, or like this one, more frequently, like maybe 3 times a week, or 2-3 times a week, so we can get more of an edge in terms of the strategy, catch up with the trade recaps, and I answer some of you guys' questions, so you guys can obviously get an edge in your trading journey. All right, guys. So yeah, expect more of these classes this week, next week, this month, next month. You guys get the point. All right, guys. But yeah, other than that, I feel like we're pretty much good for the. Wait, let me see here. Are you planning on making a video about the rules for prop firms? No, I mean, they're on the website, so you can just read over the rules on their website. I don't really have to make a video on that. I mean, it'll probably be kind of pointless. You know what I mean? But other than that, guys, I'm gonna be just pretty much getting off stream. And I'll be seeing you guys on stream tomorrow for the live trading at 9:40 a.m. EST. All right, guys. So I'll see you guys then. And before you guys get off, once again, guys, you guys see it at the top. Code Blastoise on both Apex and on the Discord, which is the first thing in the description, for 70% off the Discord and 90% off any funded account on Apex. All right, guys. So take advantage of that with code Blastoise. And yeah, I'll be seeing you guys tomorrow on stream at 9:40 a.m. EST to hopefully make some money in the markets. All right, guys. All right. Peace out, guys. Much love. Much